What's happening, everybody? It's your boy Creative. We're back at it again. Another day to create something great. We're going to be continuing where we left off yesterday, right? We're going to be continuing part two of our QQQ strategy, right? We're building a strategy that enables us to trade same day options. Remember, whenever we see DTE, that tells us days to expiration, right? And in other words, it's the same day option, right? And remember, one option contract equals 100 shares. So what we're going to be doing is continuing the work we started yesterday. So if you want to go pick up on our previous video to be able to get a quick catch up, but what I'm going to do is just a quick synopsis so we can quickly catch up, right? And again, we're trading QQQ, right? So we can do a quick overview of what QQQ is. And I'm using Cursor, Claude Code with inside Cursor, right? Let me just check my levels. All right, my levels are Gucci. Claude Code with inside Cursor. Um, and I'm using, whenever we need to suss out a couple things or flesh out a couple things, we're going to go ahead and use flesh out a couple things. We're going to go ahead and use flesh out a couple things. All right, just making sure my levels are good. We're going to use ChatGPT. So let's go ahead and just do a quick refresher of what QQQ is, the strategy that we're doing, what VXN is. Should we be using VXN as opposed to SPY? So a couple of things that we're going to be refreshing on before we actually get to the strategy. So, or back to the part two. So I'm excited for you all to be able to see this. Let's go ahead and jump on in. So again, can you all, you should be able to see this fine without problem. All right, good, you can. So remember, QQQ is like a big basket of the 100 biggest tech companies in the US, right? Like Apple, Microsoft, Amazon, Tesla, Nvidia, Palantir, right? There's multiple, all these examples, right, of the companies that are in QQQ, right? The full name of QQQ is Invesco QQQ Trust, right? It is an ETF. So whenever you see ETF, it is an exchange traded fund, right? It's just a fancy way of saying that you could buy many pieces of company, right, at once. Excuse me. I'm still getting over this head cold, so y'all are just gonna have to excuse this nasaliness, right? But we're still working, and we're going to be able to keep doing great work. So just excuse this nasaliness whenever I need to mute it real quick, so I'm not coughing or sneezing in your ear. That's what I'm doing. All right. So whenever we see an exchange, an ETF, right? This is an investment, right, that enables us to be able to purchase many companies at once. So when you think of an ETF, right, think of a quilt. You know how a quilt has multiple patches, right? Within this quilt. Let me pull up an image of a quilt. Quilt. All right, beautiful. This is a great example. So just zoom it in. Just zoom it in. Just zoom. Goodness gracious, y'all making me look bad. So we can really just tie the point home. No. Holy cow, bro. You just can't give me the picture of the quilt. All right, this is a bad example. Okay, I'll take that one. Whatever. So, reject all. This is just pointed for this purpose. So you see how, let's just call this ETFP, right? Because it's being, this is the best one I can find at some circumstances, right? So each one of these patches, right, within this ETFP is going to represent a different company, right? So this is going to be company A, company B, company C, so on and so forth, right? And the main job of this ETF is to be able to make money for said client, right? So if we're going to call this ETF QQQ, right, each one of these patches are going to represent Apple. Here's Amazon, here's Microsoft, here's Tesla, here's Nvidia, right? Here's AMD, right? Here's Palantir, so on and so forth, right? So each one of these patches are going to represent a different company, right? So whenever you see ETF, right? So an ETF, just think of a quilt, right? Because that quilt, each one of these patches represent a different company. So let's go ahead and close that. Close that too. Don't need you no more. All right. So imagine you have 100 different. This is just really just going to lay into the example one more time. Imagine you have 100 different video games, right? Instead of buying each game separately, someone makes a bundle, right? And this gives you 100. Excuse me. This gives you all 100 in one purchase. That's QQQ, right? That bundles, but for stocks, right? Why people like QQQ? It mostly trades strong, well-known companies, right? It follows the Nasdaq 100, and we're going to talk about the difference between the Nasdaq, right? Because we need to know the difference between Nasdaq and then the New York Stock Exchange, right? This is just a quick refresher before we jump in back into our strategy, so we all can understand what we're doing, right? And I'm just going to quickly go over this, right? It follows the Nasdaq 100 index. It lists the top 100 biggest non-bank companies on the Nasdaq, right? So what's the biggest difference between the NYSE, New York Stock Exchange, NYSE, right, and the NASDAQ, the National Association of Security Dealers and Automated Quotations? No wonder it says NASDAQ, right? The New York Stock Exchange, or NYSE, is like a fancy old building where people used to shout out trades on the floor. It is the oldest and biggest stock exchange in the world, right? In the U, not in the world, excuse me, little slip there. It is the oldest and biggest stock exchange in the US, kind of like the OG of the stock market, right? Location is in New York City. More traditional, older companies, think of Coca Cola, Nike, McDonald's, right? Real trading floor with people and computers. Companies meet, but very strict rules to get listed, right? Companies must meet very, very strict rules to be able to get listed on the New York Stock Exchange, right? Because it's been around since like 1700s. You'll see it bottom here. So the Nasdaq is a techie modern cousin of the New York Stock Exchange. It started out completely electronic, no shouting on the floor, just computers and networks. No physical trading floor, it's all online. Lots of technology companies like Apple, Microsoft, Amazon, Google, Tesla, right? More focused on speed and innovation. Easier listing rules compared to the NYSE, New York Stock Exchange. All right, so quick little synopsis. New York Stock Exchange started in 1792, whereas the Nasdaq was 1971. Right? New York Stock Exchange traditional trading floor, Nasdaq completely online, 100% electronic. Typical companies on the New York Stock Exchange are Coca-Cola, Nike, and JP Morgan. John Pierpont Morgan, right? If you ever get one of those trivia questions or Jeopardy questions, that's what the JP stands for. Pierpont, John Pierpont Morgan. Apple. So on the Nasdaq, you're going to see Apple, Microsoft, Tesla, right? Listing rules very strict, a little bit more flexible, right? Vibe, classic Wall Street, tech and innovation, right? So this is a little bit more about the strategy. We're going to get into that, but before, I want us to be able to get a quick overview. Is like, okay, what's the difference between VIX and VXN, right? So before we do that, let's talk about volatility real quick. Then I'm going to jump back into VIX and VXN so we can really understand and just hone in on this, right? So, implied volatility, right? Volatility is just a fancy way of saying how wild or how calm something moves, right? If the stock moves like a turtle, then slow volatility, right? That's low volatility, right? But if the stock moves like lightning, fast and unpredictable, that's high volatility. IV doesn't look at what already happened, right? The difference between this is volatility and implied volatility, right? IV, or implied volatility, looks at what the market thinks might happen next. It's like the weather forecaster of the stock market, right? High IV, people are expecting big moves ahead, right? It's a storm. A storms are coming. Low IV, people expect calm ahead, clear skies, right? Here's the key when traders IV come. Here's the key when it comes to IV for option prices, because that's one thing we need to be able to keep in play. So we're in high IV, right? Traders pay a lot more for options because they expect big moves, right? Low IV, traders pay a little bit and expect it to be quiet, right? So here's a little bit more out of the box analogy. I think we got it already, so we don't need to review that. All right, so just tie it in one more time, right? Let's say QQQ is at 400 and IV is low. Option may cost $1, right? Remember we talked about that before, the cost of an option. Remember, there's 100 shares, and one option contract. So if we're going to get the cost of the option, we're going to say, all right, it's going to cost us $1, right? But we know there's 100 shares in there. So that $1 is going to cost us $100, right? For our, are you going to let me? They'll be weird. There we go. Going to cost us $100, right? I ain't mean to get Halloween eat on y'all. That's just kind of what happened. There you go. So it's $100, right? So for that dollar, that represents $100, right? Low IV, but high IV, this same contract, because of the consumer price index or FOMO, right, is coming, right? Fear of missing out, right? That same option is going to cost 250, right? It's going to cost us $250. That same option contract because of high IV, right? So that's the impact of what IV can do, right? Low IV we're at 100, high IV we're at 250. You have 250, 150 delta, right? That difference, right? So let's talk about VXN because we need to understand that piece. And once we understand that piece, we'll just jump back into where we left off yesterday, right? Excuse me. All right, check my levels. We're Gucci. So VXN is not a stock. It's not an ETF, right? VXN is a volatility index, right? Just like VIX. The full name of it is the CBOE Chicago Board of Option Exchange, CBOE NASDAQ 100 Volatility Index. It tracks the 30-day volatility of NASDAQ 100, which QQQ follows closely. Created by the Chicago Board of Option Exchange, CBOE, right? Based on prices of the option of the NASDAQ 100. So VXN measures the market's expectations, not price movement of the company or fund. We can't buy VXN directly because it's just calculating numbers like a speedometer, and it's not a tradable asset. You can trade instruments that are related to VXN, like the NASDAQ Volatility ETP or options futures on the NASDAQ 100. You can use VXN as a signal in trading, right? So now we have an idea what QQQ is. We know what VXN is. We understand the difference between the New York Stock Exchange and the NASDAQ, right? So let's talk a little bit more about the strategy and what we're doing, right? So when VIX is high, it means that the market is nervous and wild. Prices tend to move fast, right? This strategy tries to catch on those fast movements on QQQ, a tech-heavy ETF. Remember, ETF, that quilt, exchange traded fund, it means that we can be able to purchase multiple companies with that one price, right? Using zero DTE, right? Zero same day, DTE days to expiration. So same day expiration options, right? These options expire on the same day. Fast in, fast out. Max hold time is 30 minutes, right? Direction depends on whether QQQ breaks out or bounces. Goal, grab a quick 25 to 75% profit before theta decay, right? Theta, right? Because remember, every minute, every second, really truly every second that you're holding that bag, right? Time is eating away at you, right? And it's becoming less and less valuable, right? No overnight risk, no slow setups, only when the market is moving, right? So the objective is to only trade when volatility is high. Excuse me. We're using short-term options, zero DTE, to benefit from fast momentum bursts. We get in, catch the move, and get out quickly. Avoid theta decay because zero DTE can lose values fast if the price doesn't move. Think of it like trying to surf only when big waves are coming, right? So I'm just going to stop there because I think that's enough for us to be able to, let's get into it now, right? So yesterday, where we left off at, right? Remember, we were testing out new TP ranges, if I can spell that right, take profit ranges, as well as stop loss ranges, right? Now, the only caveat here is that, let me just make sure y'all can see this. Give me a thumbs up, and you should be able to, if you need me to zoom this in, hold on, let's see this. You can see this though, right? Give me a thumbs up so you can. So where we left off yesterday, right, is we found out, let me just zoom in once because I know that can be, let me just zoom in one time. Boom. All right. So we're Gucci. And I'll just zoom back out when I'm done. All right. Let me just check my levels just to make sure I'm not talking to myself. All right. Perfect. Our levels are Gucci. So yesterday we left off of being able to test new take profit levels and stop loss levels, right? The results were a bit catastrophic in the sense of being able, so remember before we didn't have it where it was tranche like 1820. It was excuse me, before we had the 18, 25, 25, 28, 28, 35, and 35 plus, right? But I was like, okay, you know what? Can I parse it down a little bit more? So we can try 18 to 22, 22 to 26, right? 26 to 30, so on and so forth. And the TP levels we modified as well, but it didn't work out as well. So what we're going to do now is um, we need to the stop loss completed with okay, found in 2024. Remember, this was in 2024. Now we're having issues with 2023 because I want this strategy to be as agnostic as possible. 2023 is having not that great. So let's check. Let's just go ahead and run the strategy real quick. Let's run our back test. And this is our back test. Remember, we can't use back testing, not PY. That's not working with option trading strategies, right? Can't use back trader. That doesn't work with option trading strategies. Frequent trade, right? Um, Algo trade. None of these Python strategies really work with option trading strategies. So what we had to do is create our own, right? To be able to make sure that it works, right? And this is something that I went over in another video, so I'm not going to bore you with that. But this is it, so you can know I'm not using a specific Python library because when it comes to option trading, right, there really isn't a one that's native that you can use. Excuse me, that allows us to be able to start at like $100 starting capital, right? Because the other ones, like the closest one that we had was Tasty Trade, but Tasty Trade their minimum is 1,000, right? What is that? Orats their minimum is 10,000 or 100,000, whatever it is. Um, so that's why I wanted us to be able to create our own because sometimes we want to maybe to make this as flexible as possible, right? Yes, we're going to get to a point where we're going to have 500 starting, 1,000 starting, right? But I want to make this as accessible as possible to the average trader, right? Or to the novice trader. All right, so let's go ahead and run the back test. We're running it on 2023. All right, so the back test is going to be running. What we're going to do in the interim is I need to figure out what went wrong because, or let's just let the back test run. We're gonna let the back test run. Let's not overly complicate this. What I'll do is let's review our journal. Yeah, let's review our journal in the interim. And remember, for every strategy, we create a journal, and it tells you the objective, the core thesis, so on and so forth, right? And what we're doing with the strategy. And I found this to be a lot more beneficial, so we can actually keep track what's going on, and how we can be able to adjust it without overfitting, introducing bias, or being able to make sure that we're only fitting it for one particular regime, right? So I started doing this a couple strategies ago. Um, so yeah, so it just allows us to be able to keep track of everything, right? So remember, when we first started, this is the adaptive range that we have for VXN. Remember, VXN allows us to be able. It's just like VIX, but specifically for Nasdaq, right? So VXN allows us to be able to gauge the volatility or the movement. So we have our back test and it's running. Give me a second. I want to take a peek out on here. All right, so we have our first trade. Let's break down our first trade, right? Because it looks like it was good. Let's break down our first trade. First trade from backtest. All right, so let's break it down. Okay, let's break it down like this. So remember, I really gotta update these colors. I'm just gonna keep orange. Y'all can see orange, and it's not that bad, so y'all can see it. So I'm just gonna keep it. So entry is a call 274 at 271 at 42. So let's explain this real quick. So remember, call equals bullish, right? Equals we think the market is going up, right? So we bought a call 271 at 42, right? So what is the cost, right? I'm just going to bring this to black. Okay, just so I can really know that y'all can see it ain't tripping. All right, beautiful. So what is the cost? Remember, for one option contract, right, equals 100 shares. So it'll be 100. Why? Because one option contract. I'm gonna make this redundant as heck, right? So we can really, really get this. One option contract equals 100 shares, right? So it'll be 100 times 0.42, or that equals $42, right? So the cost is $42, right? Now let's explain delta. Let's just highlight this game. Let's make you purple. Well, that's fine. I know you can see purple. Let's talk about delta real quick, right? Remember, delta equals probability of profit, or how the option contract will move in relation to the stock price. So let's go with the first one, POP, probability of profit, right? So that tells us 100 times, so we can get a full number. Remember how you go from decimals to percentage, multiplied by 100. 0.228 equals 22.8%. Or for those that are real fancy, you just take this little decimal place right here, move it 1, 2, same answer, right? So our probability of profit is, let's see, bro, I feel like that should, there we go. I was about to say, man, you limited me to the colors. I know I got more colors here. Oh, you really can't see that. Do you see brown? Yeah, but it's like, you can. Probability of profit, let's make that, you can't see that. Can you see that? Yes, you can. All right, gang, let's go. So probability of profit, right, is our 22.8%. And we also have, so movement. This is called a movement for this part. Movement of delta, right? So for every $1 movement, let's do for every positive $1 movement of delta, the option contract will move how much, right? What do you think, right? So remember, there's 100 shares in one option contract, right? So we're going to take 100 times 0.228, right? And that equals 2280, right? So for every positive $1 movement, positive $1 movement, movement of the stock price, the option contract will gain $22.80, right? So, but we also have the inverse, right? And for every negative $1 movement, the option contract will lose 2280, right? We put that 8 there because we know there's that imaginary 0 that's there, right? So I really feel like we're back in elementary, but that's cool. We're learning, fam. We're learning. And that's the loss. All right. So we got that part, right? So that's what the delta represents, right? So VXN, let's talk about that. So VXN from, and I think we have that already, but let me see. Oh yeah, remember it's up top. Hold on. Let's grab that real quick. Our VXN levels so we can explain it. Boom. Let's zoom in a little. All right. So we have VXN of 29.1, right? So the VXN of 29.1 will fall into elevated, right? Can we highlight the whole thing? There we go. We'll fall into elevated, right? So that means our strategy can be able to trade it. So that's a good thing. So let's keep going, right? So we hit a take profit of 59. Let me just move that down. Of 59, right? And how long did we hold it? We held it for. Let's bring this back up. Bring you here. We can delete that because we don't need that no more. Okay. So we held gang for 5 minutes. Remember, max hold time is 30. So we held it for 5 minutes. Remember, I'm just going to bounce back and forth between purple and black. Y'all just going to have to deal with it because I know y'all can see that. So we held game for 5 minutes, right? And we were able, remember, 100 times point 0.59 equals $59, right? So what is the P&L? Profit and loss, right? Profit and or loss. Some people put in, that N could be in or whatever, but it's profit and loss. Profit and loss, right? So our cost is, remember, the 100 times 42. Yeah, make sure I'm right. 42. Let's just bring it down because we already have it. So our cost is the 100, right? Because there's 100 shares. And I know this is Halloween, but just deal with it. I'm not trying. This is not on purpose. And we know that there's 100 shares in one option contract, right? So we're going to take the 100 times the 0.42 and have $42, right? And we just made the 59, right? So we have 59, right? This represents the TP1 level, and minus the 42, this represents our cost. So now we just made $15.66. We held it for 5 minutes, right? ROI was 140, right? And we just made $15 for holding it for 5 minutes. That ain't bad. That ain't bad at all. You know, for us to being able to trade QQQ. So let's just keep going. So let's see how the underlying strategy did for the Q1. Remember, we split it up where we trade. So we see the strategy got blown up. So after the winning trade, bro, you was just super in the negative. So that's what we got to figure out. Why isn't what's going on with 2023? Because 2023 was our winning strategy. This one was good, but now we see it got up to 167, but the count was blown up. Right? So let's figure it out. Let's find out why, and let's figure out how we can be able to get this a bit better without overfitting. Right? So let's keep going. So what was that? 2023 final train. 2023 train. All right. All right. Now let's proceed to review and figure out the reason for the performance in 2023. Do this without overfitting or introducing bias, and advise findings before we begin to adjust parameters. and advise what the full parameters are currently and hypothesis. Cite your sources and response. Da-dum. So what I'm going to do now, we're going to have them, remember, go back and forth, because remember yesterday I had Cloud Code was working, but I also want our little cursor AI to be able to start working too. So how we're going to do that is I wanted to look at 2023. Okay, not 4, 3. All right, proceed to review 2023 and then advise findings. So we have one reviewing the 2023 and another just reviewing that one year. And I'm going to have the cursor Claude, cursor Claude review the entire 2023 year. Oh, we got football. Hold on. I'm watching football. All right. Y'all hold on. I'm just waiting for the output here. I think that's 2024. Are you still doing your review for 23? Yeah. Okay, here it is. And here is 2023. All right, beautiful. Let's review this one first, but before, Tennessee or Bama? I got Tennessee. I got Tennessee. I got Tennessee. Hold on, baby. I got Tennessee too. I think Tennessee is gonna get that one. Hold on. I love the energy, Jelly Roll. I love the energy. All right. All right, 2023 H1 performance analysis, objective key finding, the VIX, hold time cited. The stop loss are devastating. 44 stop loss losing $764, average 1738 per stop loss. 53 take profit, 46.1 winning, 49.88 average. All right, the sources, exit reason. The VIX 2630 regime is the killer, right? Worst regime. All right. Time stopped indicated TPs are reachable. 16 time stops losing on average $40.64. Exit the source reason. Losers hold much longer than the winners. Winners hold 8 minutes. Why are we? All right, stop loss hold average for 14 minutes and 40. Stop loss, okay. Hold finding losing streak analysis was six straight trades that you was losing. That's crazy. Um Hypothesis for the primary reason is the stop loss of the VIX regime for the 26 through 30 is too tight with 30%. The VIX 2630 lost $249.75, 77% of total losses, despite 26% of the trades. All right. The SL hit average was 1738 versus the take profit average of $9.34. A 1.86 to 1 loser to win ratio. Okay. The VIX 3630 regime needs a wider stop loss closer to 3538, not 30. The current 30 stop loss is getting hit by normal option noise and elevated volatility and not a true reversal. Y'all hear that? Hold on. All right, that's it. That's it. That's it. That's it. That was whatever. Test 3530 versus the current on 2023 to validate the hypothesis. All right, let's test 38. What what is the current full okay. Let's proceed to test 38 and gauge performance. So, currently let's okay. Currently we are back testing 2023. Um we determined that the stop loss needs to be adjusted from 30% to 38%, awaiting new results from backtest. All right, let's see what this one is screaming. Okay, I'm not watching this game. Let's see what this one is screaming. I'm not watching Tulsa. Oh, I'll watch a little Vandy LSU. I got LSU. Even though Vandy favorite, I got LSU. I don't got nothing against Pavia. I just don't think he's gonna bring. What's that? That's not Brian Kelly. What's that? Damn. All right, let's stay focused. Perfect. Now let's compile the original. All right, see the original, the final balance was at 158, 59% returns, 57% win rate, right? The tuned, right, was at 945, 112 trades, right? 146, 46% return, 66% win rate, right? Final, catastrophic. Original, no. Finding is the 2023 final is broken. The 2023 final configuration has a fatal flaw that caused the account termination. The account went negative at trade 34, February 21st, with the final balance of negative 220. So you see with options, you can lose your ass if you don't know what the hell you're doing. So that's why I go from idea to back testing to paper testing, right? So back testing is on historical, paper testing is on current, right? So you can validate the idea before you deploy it live. So right now we're back testing to be able to get it ready for paper testing. Once we paper test, gang, and she's ready to go, all right, let's run. Here's my date to the prom. The account went negative at trade 34, right? Final balance was 238, 44 stop loss costing 764. 54, the account could not recover after going negative. Root cause, the entry time changed from 9:45 to 9:35, 10 minutes earlier. Oh, earlier entries caught false breakouts near market open. Huh. Okay. We also need to consider the following. Uh-huh. I wonder why Gang Gang say that. Um, all right. Finding entry time impact in the regime. 945 entry, right? 46% to 59%. 935 entry, just catastrophic. 945 entry. Right. Oh, so you see that? High VIX, high VXN. I want to do that a couple times because I'm used to using VIX. Right. This is my first few trades like using or strategy, excuse me, using VXN. So I may confuse you two, but I understand. Just know I'm talking about VXN, not VIX. That's QQQ Indian partner. Earlier false. Okay. So this is telling me that high VXN needs 945 entries, where low VXN needs 935 entries. So we need to be able to have an adaptive entry that can be able to. So thought here, thought here, um, possibly, possibly adaptive entry for low versus high VXN. See. All right, talk to me, talk to me, talk to me. All right, talk to me. Okay, results 38% stop loss from high VXN on H1. Result win rate slightly worse. The helped but did not pan out. Okay, all right. We have a thought that we want to test out. We will get back to this, but we believe that the main culprit, or at least one of them, is the fact that we changed the entry time. Before we implement Think, remember what Think does. Think allows them to be able to, them being Claude, Anthropic's AI, right? Being able to really consider what we're saying and to show it's working. You're going to see the difference. So you're going to see here. Think about this and show your work how we can have an adaptive entry function slash method. Here is what we are basing it off of. Okay. Boom. All right, all right, all right, all right, all right. What are we doing? What are we doing? Okay, hold on. I just want to make sure. Just want to make sure. Boom. I appreciate the analysis. Okay. Now, review and let's discuss. Let's get it, shawty. You should. Oh, we got Michigan and Washington. This the big noon? Oh. Where was it? I think last week. Oh, that was like Montana or some shit. Oh, so, okay, excuse me. I'm supposed to explain this. So y'all see how thinking, right? This is a brilliant insight. Stop. The entry change from 945 to 935 might be the culprit of the 2023 worst performance. So y'all see how it's really thinking about this, right? And being able to say, okay, you know what? How can I come up with an adaptive entry mechanism that allows us to be able for each regime, high and low, to take shine when they can, right? So I like to use think, not all the time, but sometimes. Excellent hypothesis. So let me analyze this systematically. The entry impact based on the VXN 2023, 2024. Why this makes logical sense. No overfitting. High volatility environment. Market opens equals chaos. False breakouts. Whipsaw. And remember, whipsaw is like a whiplash, right? You're going forward, and all of a sudden you get pulled right back. I don't know why I just call it whiplash, but that's what a whipsaw is, right? The first 10 minutes has excessive noise, right? EMA 3.5 triggers on the noise, not the signal. Options get hit by stop loss quickly due to the volatility spikes. Solution is to wait until 9:45 and let the false breakouts clear. Low volatility environment, market open, clear, more orderly. Initial momentum is real, not noise. 3 to 5 crossover captures the genuine moves, right? Early or catches best parts of the move before it's priced in. Solution, enter at 9:35 for initial momentum. For the low volatility, for high, and that's what we're going to do. Propose adaptive function, return the morning start, morning end, power start. And I'm thinking we may get over this whole power lunch, power hour BS, but we'll see. Did he pick that off? He just batted the ball away. Good play. If VIX is 22, low regime, morning start, morning end, power start, power end, mid, and then high. All right. Option A uses the current VXN bar, checks the VXN bar at each timestamp, dynamically adjust if you can enter or not, most adaptive but complex, uses the day opening VXN bar, checks VXN at market open, sets the entry windows for the entire day, simpler but more practical, right? The option C uses the previous day VXN close, right, to determine the window can be planned before market open, most realistic for live trading. How can we use yesterday's close? How can we combine? Because I like using yesterday's close, right? How can we combine B and A? I mean, excuse me, C and A. How can we combine C and A? How can we combine C and A to work together for this function? Explain and cite your sources and response. Oh, they put 3 on the board. Are they about to return this? And he's about to take this to the house. All right, y'all just go on. He said, I'm about to crib this, man. What you thought? Y'all have to forgive me. I'm working, but I'm going to be watching football too. So we can just best of both worlds. So if y'all hear a little comment, that's just football. That's just football. Oh, let me see what they got. Okay, let's see what you brought out. Combining option A and C, real time VIX plus with the previous day close, hybrid approach, smart adaptive entry, uses yesterday close, option C to set the baseline for the entry window, then uses the current VXN to dynamically adjust if the condition changed significantly, right? Why combine both? Option C, yesterday's close, realistic for live trading, can plan before the market open, avoids the look ahead bias, misses intraday changes, flash crashes. Option A alone, Most adaptive to current regime, catches regime changes midday, can cause re-entry, can cause entry window changes during trading misses. Combining the two uses yesterday's VXN close to set the initial window, right? Then we're going to get the current VXN to validate entry is still appropriate, right? The adaptive best of both worlds. Use the previous VXN to determine the baseline entry, right? Then we're going to use the current VXN to validate the entry condition. Ours previous VSN, and ours is just an example. So we can see it, we can understand it, right? Returns bool if true, if timestamp. Okay. Okay, VXN entry. Okay. Current analysis showed entry regime dependent. Using yesterday close to determine the baseline entry from option C. This is what we need to know before the market is open for planning. If then, step 2, check if the current regime is within the baseline for entry. Use the current to validate option A of current. Okay. Simplified version, less complex. Use yesterday for baseline, but if current is high plus 25, never enter before 9:45 regardless of baseline. All right, shall I proceed with implement? Recommendation, use the simplified because it uses yesterday, knowable before the market open. Adaptive overrides based on the current, catches the regime change, no overfitting, simpler rules based off clear thresholds, testable, easy to validate. All right, let's proceed. All right, so let me just go ahead and get what we're doing. Let's proceed. All right. And this is what we are working on now. Gucci them. Let me just undo. Let's go ahead and put black. The blacker the berry, the sweeter the juice. Use yesterday for the baseline. Okay. Determine baseline from yesterday's close if, excuse me, if baseline was yesterday 22, min entry time 9:35, else if 22 previous day close, max override if current. All right. This is what we are back testing now and awaiting results. So you're going back to 30. Oh, because the entry time, the entry time, the entry time, the entry time. All right, so let's let that run. Let's come back over here. So I'm working. We have insight 2. Where do we stop? Finding 3, because we talked about 2, 1 and 2. This is how what we're working on right now. Let's go ahead and do finding 3. The win rate. That change, a paradox. The improvement to the win rate came at a cost of smaller average wins, the target lowered, larger average losers, stop loss widened, and net results similar profitability despite better win rate. Finding 4, 2025 shows opposite patterns. Final, right? Tuned at. This suggests that the 935 entry might be better for low VIX environments. Less volatility means less false breakouts. Earlier entries catch the initial moves before the momentum fades. Lower VXN, shorter intraday trends need faster entry. Finding 5 is that the VXN regime is the dominant factor. Average, best, worst, spread. Okay. Strategic insight and recommendation. Use different configurations. We're already doing that. That's funny. How we got there before I even read this, that's kind of funny. That's how you know we got this. I'm smart. Excuse me. It's like, you know we got this, kid. Let me check my levels. That wouldn't be smart if I'm talking and my levels is shite. And my levels is all right. My levels are Gucci. We're already doing this. Tune Insight 2. The tuned version is your best bet for high volatility. Entry 945, 35 max. Okay, stop loss with the adaptive. All right. Insight 3. 2024 shows promise in low volatility but needs more data. The VIX 1822 environment like 2024. Potential but only 44 trades statistically insignificant. Fairly profitable and needs validated and more data. Back testing for 2024, get 80 trades. Test on 2022, validate across years. Bruh, I have 23 and 24. Final recommendations. Time to, we already did, we're doing that. Avoid. All right. We're kind of already doing this, man. Honest assessment, the strategy has a genuine edge with the VIX greater than 24, 46% validated. The win rate is consistently 60 to 70% across iterations. The entry signal, the VWAP plus EMA, has real quality. The systemic development across is, right, the fuck. The low VXM performance. Yeah, we're working on this. We're working on this. All right, bet. So let's just wait for our output here. And once we get our output, but it's just eating away. Once we get our output, then we're going to be able to gauge what is happening from. If you all have any questions in the interim, see, it's already compacted. Oh, look at this. We're profitable again, fam. We're profitable again, fam. We're profitable again. Gang. That's what's up. That's what's up. See the whole adaptive strategy work. I ain't gonna hold you. I know a little bit, not a lot of bit, but a little bit. Man, we working. I said we working. Yeah, we moving. Yeah, we working. Yeah, we moving. Yeah, we moving. Y'all, this is fantastic. Fantastic work we're doing here. I'm just waiting on the compact to stop. Once that stops, then we can really gauge on what has happened from. Right? We can really gauge what has happened. Just waiting on this to be able to output, and this compacting. A little shy. Um, what did you say there? What did you run in? Yeah, man. This is dope. This is dope. I'm just waiting on the output. Once we get the output, we'll be able to continue our work. Here goes the output. Oh, Diego Pavia, first down. Diego Pavia, touchdown. Jit took off from the 22. The adaptive on the 2024. See if it maintains. Um, let's see. Let's see. Let's see. Um, final train. Did you or didn't you? Yes, this is it. 153. 153.03. Okay. All right. Review and check the updates we have made here. We added our own version of the adaptive entry, and let's discuss. Excellent. I can see that the adaptive time entry logic. Let me read the section where it's actually used in the back test. Legit is gonna be 38. Perfect. I can see your adaptive entry logic. Let me analyze this and address the issues we found. Get in there. Fascinating. The 2023s are very interesting. Let me dig a little bit deeper to see what happened. Cause I'm smart, bro. I'm smart. Before you even said it, I told you we need to do something adaptive. I told you, bro. Yeah, this is code, man. Code. If you can think it, you can do it. Appreciate. Yeah. Now let me create a comprehensive analysis of your adaptive entry implementation. Bro, just run it on. Yeah, don't limit me. Oh shit, I really dislike when it does that. Cause you just taking up. He said I'm gonna get my touchdown. I don't care what y'all say, but I'm gonna get my touchdown. All right. A 63 pp point spread point pp. The executive summary. The adaptive entry is excellent. Fixed. Returned. The 2024 adaptive entry returned to the adaptive entry turned a negative 21 loser into a 5.5 winner, a 26.5% percentage point swing. Right? Implementation. Why this works. Normal. High. Avoid fake out. Low. Catch early. Spike. Okay. 2023 AVXN high vol environment, 114 trades, 100 versus 112, 53%. See, I dislike when you do it. All right, I'm gonna tell you to stop doing that, bro, because you really don't. Just wait for the damn back test to finish. That's like a jit asking, "Are we there yet? Are we there yet? Are we there yet? Are we there yet?" Every time you see that, it's "Are we there yet? Are we there yet? Are we there yet?" Right, get it. That's really not needed, fam. So you see here. So this turn from, remember, was 22.50, 22 and 25. This was our worst period. It turned from our worst to our best. That's crazy, right? 22. Okay, good. This still and struggling. So we need to get better on the greater than 28. Okay. The adaptive strategy correctly identify the 22 to 25 VIX sweet spot as the most profitable. Is now low regime, 44 trades, same as the fixed versus the 5 before. Okay. Better entries, more profitable. This is huge. The low VXN fixed the 945 timing loss, but the adaptive 935 timing makes money. why adaptive works. Works in high VXN, avoids the false breaks out. Fails in low VXN, misses the early momentum. The original, the solution is the adaptive. Okay. Who's this? Is this Kentucky? That look like Kentucky. Taco Bell live Mosh L student. Oh, this is Duke and Tech. I'm not watching that. Baylor and Tulsa. That may be a good one. I'm gonna stick to this Vandy game because I think that's gonna be the one to watch today. I mean, the Michigan, Washington, that is a good one too because there are some dogs on that one. I like the quarterback over there, and they got some nice receivers and a dope ass DB. I think number 12 or 10, whatever. Um, yeah, I'm gonna stick to Vandy LSU. I'm gonna peek in to Michigan, Washington, because number 12, I told you, got some receivers and a dog at quarterback. All right, let's keep going. Insights in 2023, the varied VXN environment, the adaptive. Okay, thank you. Fixed, adaptive. Okay, 15% return versus 5.5 with the fixed 9.5 entries. Key insight, 70% win rate was 68. Profit factor maintained. 44 trades, fewer but more selective. Max drawdown, that's still high. The adaptive entry improved performance across both the high volatility and low volatility regimes. The hybrid approach is using yesterday's VXN plus the current VXN override to successfully adapt to the changing market conditions. All right. So we fixed the entry. Okay. So that's weird. All right. So we fixed the entry problem, but now we still need to get high vol profitable and lower the duty, the max draw, and lower the drawdown. Drawn down. Nope. Drawdown. All right. Now let's look into the max drawdown. And figure out why we are at high levels. Do this objectively without introducing bias. Let's start with 2024. Yeah, because that's my big question is like, I told you start with 20. That's what this is like, bro. I don't care about you. Boom, boom. All right, let's see our back test. This is good. So I'm gonna let you run. Remaining issues, a small sample size. The exclusion of the complexity requires real time. VXN less than 20 still loses. Should add stricter filter. Drawdown can be large at peak. That's what I'm working on right now. Peak to trough, right? Peak to trough. 35% is the actual back test, showed 44. The period April 5th through May 2nd, 20 trades, root cause. The average loser was 2 times bigger than the average winner, right? 46 times. The loser eats 2 winners to break even, needs 3 consecutive winners to recover from one losing streak. The VXN 20 to 22 regime, 50% of the DD drawdown trades. The higher vol plus wider stops getting hit, 40% of stop loss during the drawdown versus 27% overall. Trading in choppier conditions, 19 plus 22 through 22. 3 losing streaks. All right. The max drawdown happens when losers cluster, plus losers are 2 times larger than the winners. Not a regime issue, evenly split VIX 18 to 20 versus 20 plus, but a risk reward asymmetric issue. All right. What provide a great idea on how we can improve this and cite your rationale why. I ain't gonna hold you. I told you I did it. Ba-dum bum bum, ba-dum bum bum, ba-dum bum 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 bum. I was gonna say Must Burger ain't back there. It must have been a burger. If you want a burger, eat a burger. If you want a french fry, eat a french fry. Vine days. I wonder if people that are on Vine can do well or would have done well on TikTok. UTNAs. If you want a burger, eat a burger. If you want a french fry, eat a french fry. All right, proposed solution for the partial exit strategy. Losers are 2.21 times bigger than the winners, $15.18 versus $6.85. The higher entry prices equals bigger losses. Entry less or greater than 30 has a loss of 1830 versus entries less than 30, loss of 1291. TP1 126 ROI captures $6.79 while the stop loss gives up the full position at the 40-60% loss. The single require to the single loss requires 2 to 3 wins to recover is unsustainable. The root cause is the all or nothing exits. We make full profit at TP 2.6, but we give up the entire position at stop loss levels 0.4 and 0.6. This creates a massive asymmetry. The proposed solution is scaled exits. Exit at 50% of position and then move stop loss to break even. Exit at 50%, exit, and then remaining 50% for losers. First stop loss is 70%, exit 50% of position, tighten for the remaining rationale, evidence. Why this matters: a higher entry equals more dollars and more risk with a 40% stop loss. Scaling out at 70% cuts losses by 30% on the remaining. Evidence 2: TP2 shows promise. Only one TP, one hit, but could made $8.66 versus TP1's average, right? So the expectancy, proposed math of partial exits. Protect capital on losers. Exit half before full stop loss. Capture runners. But can you do that? Okay. Before we implement this, this is option contracts we are talking about here. Option contracts we are talking about here. Let's check if, which I don't think, which I do not think, but let's double check that we can close out partial contracts. I believe it has to be the entire contract, not partial like we can do in stocks. Now, double check and advise then if that is the case, update the plan. Beeps! 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 Not just say trade. Da-dum, da-dum. You're absolutely right to question this. Let me verify the mechanisms of option contract exits. Because the option contract is a whole contract, right? It's not like a stock where you can do fractional positions or shit like that. Like it has to be the whole thing. You can't just say, "Oh, all right, bet I'm gonna just drop the half thing." Um, damn. Well, what am I looking for? I'm not gonna hold you. I told you I did it. Oh, that's what I want to check too. I'm going to check right now on Robinhood because I'm pretty sure that it is full position. Let's try to open up an option contract. I'm going to go to, this is not financial advice. Please don't take this as financial advice. Option, open, boom, buy. Let's try to buy. You can't even buy 0.5, bro. It needs to be a whole thing. You're correct. Excuse me. You are correct. We cannot partially exit one contract. Here's the revised plan. The adaptive stop loss with the entry price. Entry 0.75. Stop loss is 40. Low risk money. Entry of stop loss is 35. Entry greater than stop loss is this. Rationale. Higher TP. Okay. Before. All right. Let's test this theory out. Yes, because you can exit one contract. If you have two contracts, you can exit. That's a partial exit because you just exit one and keep one. They said, man, we here to play football. I don't know what you doing, but we here to play football. I don't know what you doing, but we here to play ball, man. We here to play ball. Da-da-dum, 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 dum, 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 da-da-dum, 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 dum, 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 dum. I am waiting for the output. The output of this nerd. I am waiting for the. Told you it was gonna be there. Blue fruit and LZ. Blue fruit. LZ. Oh, beautiful, beautiful. Tap in, tap in. Let's check something. Run my little bat test. Back test, baby. $10.7. I think halftime is when I'll probably. I'm not going to hold you. I told you I did it. All right, I'll be right back. I'm gonna grab some water. Oh snap! We got our results. 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 Hold on. Return 96%. Win rate dropped. Profit factor increase. Average winner increase. Average loser decreased. TP1 trades. TP2 stop loss. TP2 increased 10.5 times 10 trades from reaching the targets. TP2 is now consistently equaling TP1. Providing higher targets work, the adaptive will reduce the. Alright. Strategy validated. But not really, bro. Like, let's test on 23. Test on 23. Let's test it on 23 and let's gauge the results. Test it on 23, gauge the results, and let's see what it's screaming. Oh. What a man. Oklahoma's playing South Carolina? I'll check out that one. We got Michigan State at Indiana. Let's see what it's screaming. Let's see what it's doing. Oh, Missouri and Auburn gonna be a good one. Mizzou. That's gonna be a nice one. I see what you're screaming. I see what you're doing. That's interesting. That's interesting. Hold on. Let's check out our results. Let's check out our results. Much worse. Win rate dropped. That's crazy. The higher TP backfired in 2023 high volatility. More TP hits. Okay, but 3%. But higher TP worked in low vol but failed in high vol. Need regime specific TP targets. Give me an great idea for the regime specific TP targets. Then after we hit this regime specific TP target, then we're going to call it a stopping point for right now. Then I'll be back a little bit later to top this off. I'll go a little bit longer later to be able to get this done. Oh, go score. Go score. Go score. Kind of fixed it, but need to tweak a bit more. 70% stop loss versus 30% hit rate, 2.3% more stabs. Currently waiting too long for chaos. Propose reliable survivor mode. Grab profits fast before whipsaw kills you. Whipsaw, whiplash. 50% stop loss versus 35% takes profits. 1.42 more stabs. 3% lower. Quick exits in choppy conditions. Let runners go to TP 1.5. Best regime. More wins, but still 50% more stake. Okay. Limited. Okay. All right, proceed. We're trying this game. We are attempting the following. Yeah, then after this, I'm going to have. We're going to call this a stopping point, and then I'll be back on a bit later to be able to cap this off. This is good because we're seeing like how this is my process on how I get from I get this strategy up and running and ready to go. Now the previous strategies really didn't take as much work. I mean, yeah, they did, but I just didn't stream as much, or excuse me, I just didn't show as much, right? Whereas this one, like, I want y'all to see the entire process, like how it's going. Oh snap, we reverted a little bit. Oh man, we were able to make some gains. Oh man, we regressed a little bit. You know, there is that ebbs and flow to being able to see it. But then we also need to get to a point where, like, all right, this is enough. You know, where we can look at a strategy and say, okay, you know what, maybe this one is not the best one to be able to trade. To be able to trade QQQ and VXN. Man, just go back to the drawing board, right? So let's continue to work, homie. Let's continue to work, homie. Let's continue to work, homie. And if you do have any questions in the interim, let me check my levels. We're Gucci. Please let me know while I'm waiting for this back test. And as soon as it finishes, I'm going to have it update our journal with what we've done. Then we're going to call this a stopping point and then continue our work a little bit later. All right, talk to me nice. Talk to me nice. All right, great. We're practically wrapping up. That's crazy. I did not expect that. Let me check something. Well, this is fantastic work, man. I'm glad we're able to get this work in. Excuse me. And finish these moments, just waiting for the back test to be able to output. And once it's output, we'll be able to gauge if this adaptive TP strategy works. And if it works across both, then we have we'll have levels, fam. All right, let's see what it's screaming. Oh, we stopped at 189. I think it did work. I'm thinking it did work. Breakthrough, we went from negative 167 to 54%. The high TP, the regime specific, 221% bumped. Okay. Max drawdown is still high, bro. Lower TP targets in high regime, lock and repart profits before. Nah, this is what I need you to do. Update the journal with what we have done and learned during the past few tests before. All right, people. So I want to call it a stopping point here while we're updating our journal. I'll be back a bit later such that we can continue our work. You see that the strategy is working, right? We just need to be able to go through different iterations, right? And we're doing this without overfitting. We're doing this without being able to introduce bias. We're making sure that this strategy is as agnostic as possible, right? I just want to make sure that we're diligent about this, right? So I'm going to take a step out, but we'll be back a little bit later to be able to finish up this work. It's your boy Creative. I appreciate y'all. And again, we do great things over here. So remember, you continue to be great.